Welcome back to another episode of the Backholder Pod. Today, I think we're going to talk about, amidst this market volatility, what each of the people on Backholder is looking at, and maybe even share what they've been buying. So maybe to start off, I think just to give you guys specific context, I think the Nasdaq, based on the time of this recording, is already in correction territory, down more than 10% from its all-time high, while the S&P is still hovering around the 5 to 10% range. So before that, I think there's a lot of commotions around Liberation Day, the commotion around tariffs, recession, and whatnot. So specifically, I think in this video, we're not going to discuss much about macro. We'll leave it up to you to decide on whether you continue to remain bullish or bearish. But more so, I want to kind of tap into each of your minds today, into what you think are very viable or very interesting investment opportunities, or personally, what have you been adding? So maybe just to kickstart the entire discussion, maybe Eric, you want to start first? First off, in terms of your overall market view, and what do you think is maybe not the best, but just your own view, or what have you been personally eyeing and looking into right now?
Okay, because I think as all of you know, I have recently settled the big piece. So coming up, I'll be looking to put my cash into some stocks. So I'm currently looking at Alphabet, Google, um, not for any reason, but because the narrative surrounding the company is pretty negative because of the increase in AI searches. So a lot of people are saying on the X and all that, I am not Googling much nowadays. I'm using the Chat GPT. So there's a lot of talk of people doing that, like more and more. They are assuming that search is going to go down. But I look at the Alphabet's earning, right? Actually, it's not going down. In fact, it's growing like across all their sectors. Revenue, income, EPS, operating income is all up year on year. So, and it's been quite a while since ChatGPT came out. I think easily like a year plus, if I'm not wrong. Yeah. So, if it did affect it negatively, right, it should already show in 2024 by quarter four. So I thought that if there's no effect, in fact, there's is also helping Google search, then why are we not investing in it? Just because narrative is negative. Yeah, so I think that is my primary overview lah. I haven't dug into the numbers yet, but it got me a bit interested because it is the story is negative. So that's why the share price is, I would think, is slightly depressed compared to the rest. I mean, everyone came down lah, like recently, but I think Google has been like down for about 2 years. Yeah, so the PE ratio also not doing well, despite the fact that they are growing their revenues, their income. Yeah, so yeah, that's my initial take lah. So I think I have to do more research before I pump in. Even I already have holdings in Alphabet lah, like small holdings. So have to look carefully before I increase the percentage. Yep, that's all.
Actually, actually, I've also been buying Google.
Oh,
Yeah, because I got money now.
wow.
No,
But
but
wait,
I think it's also not just about the search. Their search is actually becoming a smaller and smaller part of their business. So first they say it's the AI disrupting search, but actually if you see the latest model, the Gemini 2.5 is actually beating all the rest of the models out there lah. Okay, other than image generation, which ChatGPT is excelling at, the rest like logic, reasoning, like programming, their Gemini is actually doing the best. But of course, other models can just leapfrog in the next quarter, something like. So that's the first thing. They are actually leading in the AI. If you're talking about LLM, they are leading. The other one is their small bets. They are the Waymo. Right now, I think it's doing like what 50K trips per week. So not only is beating Tesla, but it's also expanding to other cities in the US also. So that's the other part that I'm also very bullish on for Google. So right now it's a small part, and later on they can sell this as a subscription to other like automakers, like lorries, these trucks to boost their profits. So yeah, Google is not just search lah. And right now it's also super cheap, right? I think their PE right now is already below like 19, below 20. So, but of course, like there's also a lot of other risks coming in. So like search, uh, then there's the recession thing. If recession come, their search profitability will drop. Yeah, but all these I think are quite minor lah. Yeah.
Yeah, I think it's true lah. Because let's say if the economy, if it is not doing good, right, it will affect this kind of search advertising business more than the other type of business. Because if you compare Google and Meta, right, which is more on the advertising side, versus the other so-called those companies that in the technology sector, right? For example, like Apple, Microsoft, right? Actually, the biggest difference is that for Apple and Microsoft, let's say if the economy is not doing well, people are still using Windows, they're still using Mac, they're still using iPhone. So they're still in the ecosystem, right? They can't get away, right? And those spending will continue. But for advertising revenue, I think it is heavily influenced by the economy. And right now, at this point, even though if you watch stock market, the price came down because of all these tariff, these are mostly still sentiment based rather than really fundamentally based. We don't know because right now it's still like people project forward. It's like, oh, we don't see recession in the next 6 months, but who knows, right? It could happen second half of the year. It could happen next year. But once that happen, right, it will have a bigger hit. But I would say there's one point about Google that is not looked by others, which is their infrastructure. Say even let's say their advertising, right? It's not just like they are having this ecosystem for advertiser to advertise, like putting your ads in your website and so on. It's not just that. Actually, it's behind the scenes, right? They have a lot of all these infrastructures. For example, like the ads bidding, that kind of things. These are not how to say not transparent to user like you and me, but it is, you just ask anyone who is in the advertisement industry, they will tell you that if you are in there, you are spending on advertisements, right? You just can't get away from Google. And the other company, of course, is Meta. These two companies like the largest one in terms of advertisement.
Chi Keng, do you have like any bad thesis on Google? Like any chance that this could be a bad buy? What are the risks?
Actually, I'm personally buying also. So seems like it's a 4 for 4. I did created video for it already, but I haven't filmed. But I think the general bear thesis around 5 of them lah. Firstly, of course, your macro. Secondly, they're investing quite crazily in terms of their infrastructure, and this is a lot higher than what the street already estimates. So their free cash flow is going to tank quite a bit. Thirdly, of course, your Google search under fire. Lastly, I think, fourthly, Gemini, and lastly is the Department of Justice. But I think circling back to what Boon Tee is talking about, specifically about ad architecture and whatnot, actually, then the same can be said, right? Where advertising has become a pretty mature industry. So you have your three heads, which is Google, Meta, and then of course Amazon as well. They basically own like, I don't know, I believe for 70 or 80% of the entire market share. So yes, they follow the boom and bust cycle of the economy where when there is a lot of activities, then people through the auction system they beat up everything. But then when the economy tanks, it does not mean that people stop advertising. They just advertise less because there's no better alternative other than I don't know, maybe use social media or whatnot, because that is an organic traffic channel. So that's a different strategy altogether. But if you talk about paid channels, everybody still need to come back to this tree. So in a way, it's the same as even recession, people still use Microsoft Windows. People will still stay on these three big platforms. It's just that they spend lesser. But then if your long-term thesis is that everything will recover, then all of them will be at the pinnacle of being able to capture the upside again. So that's my general take on, if you are comfortable with the volatility in the middle and you don't care about negative 10, 20% that comes in if a very bad recession hits, then it should still be fine. Because I think now also I've recently read about this idea of Google trying to, at least on the campaign side for advertisers, there's this idea of something called Performance Max, where rather than doing auto like one bidding in one specific type, like let's say Google search, you go into just one UX UI, and you relinquish control and you allow Google to just help you spread across all their assets. So there is a better testing or engagement. I'm not too sure what's the effectiveness because I think it's still in early stages, but these are the things they're doing behind the scenes in terms of ad infrastructure. So that's something that they are trying to monetize better as well. But yeah, I think fun fact as well, a lot of the discussions around just something that I looked or came across is that I'm not too sure whether you when you started still doing some Google search, right? Last time was 10 blue links, and that was the very cost effective way. But then now recently there is this like AI overview thing. I'm not too sure whether you guys realize. Then people say,
Yeah, yeah.
oh, search is dead. This AI overview, people get the answer already, then they're just gonna bounce off and click off. But the fun fact is when I was doing some like I saw some study, right? Apparently, actually based on the existing clicks, right, before this AI overview was implemented, around 58 or 60% are called zero click searches, meaning to say they just click, they look at the first blue link, and then they don't click in. So there is no forms of advertising that's going to be delivered to the end user or to the consumer itself. So in a way, this AI overview basically just flat out or just wash out a lot of all these people that you don't need to show the blue links. But in fact, out of the trillions of searches like monthly or daily, actually only 1% goes into the paid ads. But only this 1% itself is already so profitable for the entire suite of Google assets itself. So it's really just a numbers game. But of course there are some concerning things that I'll share in my own presentation now. But I'll just leave it as here that this is what I've been looking at so far.
Yeah, because I think it's also very true that it's not like everything they need to monetize. It's not like they are selling you the links, right? For example, like okay, you pay them, they show your link, and then people click into your link, then they take a cut. It's not like that. Most of their revenues actually come from, let's say, like within the website. Then there's some advertisements floating around, right? Those are the one that is actually generating revenue for them. And I think they are so good at what they call the intent-based marketing, right? Because say, for example, you already want to travel and you wanted to travel to, let's say, like China. So you're already at a air ticket booking website. Then you can see some ads that is floating around showing you, oh, go to Beijing, go to Shanghai, Chengdu. So you already have the intention. That's why you do those searches, and they get all this data to do the push the ads to you, right? And it's always the relevant ads that is most effective. So I don't think for example, you just want to do a conversion, say 10 feet is how many meters? I just want to do a quick check, right? Or 1,000 ringgit is how many Sing dollars? I do this kind of search. Usually this kind of search is just like, I'm just want to get the data, right? It's not like it leads to any transactions or somewhere that Google can take a cut, right? So for those items, I think they are just happy to provide a good user experience to their customers so that they stay on the platforms. But the one that they really want to monetize well is when you have an intention, and specifically the intention to buy something. Say you want to buy, wow, I saw the watch so nice, and then you go and search the watch. After you surf a few pages, Google know what you are looking for already. And then from there, he will just serve you the right ads, and then once it convert to a sales, they take a cut. So I think it's very, very unique. I think no other advertisement companies that is so good at understand your intention. But
I think this intention bit is, I think Google is on the back foot against all those like TikTok and all that. Like just to give you an example, right? Like over the holidays, like was it yesterday? No, 2 days ago, right? I went to this place, Fortune Center, to have a meal. I was taking a few pictures of the place because it's like jam packed. There's a very long queue, and then we got to the food, and it was like very nice. So I took some pictures of the food, and then I posted it on stories, TikTok. And then after a while, right, I scroll on my TikTok, I can see other, advertisement about that place, like immediately. Like I also see it on other platforms as well, like uh, Instagram, Facebook, all this. I believe that somehow they can capture where we have been and then serve us like relevant videos, like sponsored videos. But Google at this point, I think you have to key in a relevant search, then they can start to push out all this content towards you. Like if you're not searching anything, right, there's nothing to push out. But for like TikTok and all this, right, you just randomly scrolling, then they just push all these things onto you. Yeah. So once they got your information, like where you've been, your location, then they can start serving you all these things already. So I would think that Facebook, Instagram, TikTok, all these, I think they are more like aggressive lah, in that sense. They are more proactive. They able to serve you all these ads, sponsored posts and all that. Much more than Google. Google is like the search intent is very high, like what you say. You already intend, like you're further along in your consumer journey. So I don't know, like the percentage of conversion is higher, but it's net off with like if I don't search for that, you cannot serve me the content. So it's pros and cons, I think.
But the search, if you think about it, the search is really like you are out of the 100% journey, you're already 80%, 90%.
Yeah.
You already want that thing already. So they don't need to, like market to you. Like you imagine me selling you something that you currently don't want versus you already want something, you just want to choose which one, right? So I think that makes the intent one a lot more effective at conversion.
So just to
Yeah.
add on a little bit about what Chi Keng said about performance ads, right? I believe you were saying something about that.
Performance
For
Max. It's
Max,
a
yeah.
new,
So
yeah.
I have used that like in the first quarter of this year. I tried it out first 2 months. It lowered my CPC quite a lot, cost per click. But the conversion, right? I realized that is not that great. Yeah, because they pump it out to all the different like the display ads, like people are randomly just browsing some blog or whatever, right? Then my ads will come up, boom. Do you need chemistry tuition? I'm like, bruh, you just randomly just pump
Actually,
everywhere.
I do feel this kind of thing, you need to give it time to work its way and to iterate though. So it's just a new, I guess, implementation. But I think
Yeah,
over
yeah.
time, rather than I believe now you do auction based is really very intentional in what you do, right? But because I think Google will have a better view of their entire suite of assets in the future. So then they will, once they integrate everything, then from an advertiser perspective, I mean I'm more bullish on this rather than what's that called? Yeah, anyway, yeah, I'm just bullish in terms of the trajectory of how they are managing their ad architecture. Yeah.
Okay, I think just to give our viewers an idea what we are talking about, right? Like we're advertising on the Google AdWords. So there's a traditional like Google search. So that's the lion's share now. People type in the search and then you just show in terms of broad base keyword and versus narrow face base. So now they're pushing this performance max thing. So they basically will like what Chi Keng say, or they will pump out to more outlets that Google have access to, including display ads on blogs and random websites. So
Email
basically,
also, I think.
yeah, so basically just cut down on your CPC, but drastically increase your impression. So it kind of create more awareness for your brand in that sense. Whether or not it converts to like conversions, on my end, I'm not that convinced at this moment. So I'm sticking to the display, like Google search display ads for the moment. Yeah. So that's the breakdown.
And I just wanted to add something on what Boon Tee was talking about in terms of this intent search, right? So actually, you know which company has the best or highest intent when they go into the search bar? It's not necessarily Google. It's actually Amazon and slash, of course, Alibaba lah, because they're already in the e-commerce side. When you go into an e-commerce platform and you go into their search bar, I think it's quite obvious that you're not searching for discovery lah, or searching for something that maybe you want to do some sort of a comparison across platform. That one maybe, so it doesn't result in immediate purchase, but more so I think the value of that search might be a lot higher compared to maybe on TikTok or on Facebook. But that said, I do think that a lot of people that are more experience based, for example, let's say I want to search what to do in Singapore. And then usually those kind of searches, you'll go to social media platforms that give you like, they call it 攻略 in Chinese. So meaning like they tell you what to do, where to do, and then you get a lot of those ads that are suitable in that space. But I think going back to the point is that when we said that search itself is going to be destroyed by LLMs, because a lot of people are going to ChatGPT, DeepSeek, Grok to do a lot of their searching. A lot of those are not intentional search. Those are a lot of the data aggregation search, meaning I want to know maybe this industry, I'll do some research and what. So a lot of all those searches, yes, now as they're currently being disrupted by all these large language models. But I'm not confident to say that they are actually those high value searches that Google are losing. So it will impact their revenue, which is also why when you kind of track, at least based on the last 2 years after GPT and what a lot of all these things are coming up, their revenue and stuff their growth is still intact, everything is still growing, and everything looks fine and dandy. But of course, if I want to caveat the point is that I also do feel that they are trying to push up a lot of their impressions and trying to monetize really. So meaning to say maybe their impressions are really going down by quite a bit in terms of their available advertising real estate, but yet at the same time they're pushing up so that they can still keep up to their growth. So I'm not too sure whether this is sustainable. In fact, next time maybe your first page of Google of 10 blue links, maybe the first 8 become all ads. Then I think that's also a very big concern about how they're able to balance this thing. So I think just to try to provide a balanced perspective, they're not saying everybody say buy Google means Google is the best buy. I think just to put a perspective that here's what's exactly going on. But
yeah. Just now, when talk about revenue, I think Eric mentioned that revenue hasn't affected, right? Or Kelvin. But we have to remember, as of now, right, all the large language model, be it Grok, ChatGPT, or Gemini, right, all of these, they are just chatbot answering questions. I think none of them have incorporated ads into their UI. You don't see ads floating around. But let's say if that start to come, right, let's say once you start to see ads popping up, right, that means there's more real estate avenue for advertisers. So it will spread out the revenue. So I think it could have some impact if they all go down to that path. Because I think all these services, right, let's say, imagine that you are paying $20 for ChatGPT, right? Are you willing to become smarter and smarter? Usually no, but is for sure is that it will take more and more eyeballs. Your eyes, right, will stay longer in that ChatGPT or Grok windows, right? And that one is like they can monetize it well. That's why I think it could come out. It's not like we are looking at ChatGPT came up 2 years, still no impact means no impact. That's because they haven't really changed how they play the game. So that one is also something to watch out. Yeah.
Monetizing well on that part, on advertisers, it's always also about conversion, right? Because no point, unless they're talking about brand awareness marketing, which is they just want to get their name out there. So back to the point, if today I'm interacting with a chat bot, let's say in terms of data collection, or maybe next time if there are agent LLM that helps me plan a lot of my, I don't know, itinerary down to travel to some places. Yeah, it goes back to the what's the intent and how well they can convert the person and at what journey of the customer journey they are in. But going back to like Gemini 2.5 that Kelvin mentioned also is that I feel like, I don't know, this is my own personal experience. I feel like the competitors now, because of all these iterations, they are diluting the space so much to the point that I'm a bit sian of a lot of all these updates already. It really becomes a commodity because I'm not affiliated, I'm not religious onto one platform. Sometimes I use DeepSeek, sometimes I use GPT, sometimes Gemini there. If Gemini is on the site, I sometimes just use Gemini, whether it's in Google Docs or on search itself. So then it becomes the point where all these real estate will then be dependent on who has bigger distribution. At least for now, GPT is still 60-70% market share. But who knows what's gonna happen. So I'll just leave it as that. Maybe anyone wanna close this topic? Eric? You started the Google thesis. Now you can end off the Google thing.
Well, I don't have a thesis yet. I'm just saying that I own some shares of Alphabet lah. And then I see that the share price is pretty depressed. And then I'm thinking like, why is it? I use so much of Google's services, but yet the share price is not going anywhere, like for 2 years, while the others is like 10x, 5x, even 2x. Then Google is like, just increase $20. So it's like quite lame lah. But so I wanted to dig to find out why. So at this moment, it's I think the numbers are still looking good, but as what Boon Tee has shared, right, we need to be aware of like when the game will change. Yeah, so I think that's in a nutshell pros and cons for Google.
Okay, moving down the list, Boon Tee, want to share what's your existing or new picks? What you're adding in this market volatility?
I actually don't know. I look at the market drop so much, right? All stocks all drop. I think they're all giving us good opportunity to accumulate, especially the companies that we already monitor it for some time. We understand the business, and then we can just, buy when now valuation is a lot more attractive, right? If I were to really give one company, like just one example, right, is that I'll pick ASML, which is a semiconductor or lithography companies. This is the company that create the machines used to fabricate chips. So why I mentioned this company, because I tell you a story. There's one investor who I respect quite a lot, and I have a chance to have a chat with him, and then I asked him what's your thought on different companies, right? Are you concerned about, let's say, when talk about Nvidia, are you concerned about DeepSeek, these kind of things? And then he just straight away brushed me away to say that actually, like it's almost like asking me like, why are you asking these questions? If you look at my portfolio companies, revenue all go up, earnings go up, the fundamentals, all free cash flow all go up. These are companies that is like, people call it compounders, right? They are usually companies that is like monopoly in certain sector. So one good example is ASML, because under the lithography market, I think they have like 90% market share. If you own these kind of companies, right, of course the share price can fluctuate. And recently, ASML price, I think, from about $1,000 dropped to now about 600 plus. So it is quite a big dip in terms of the share price. But actually, if you look at the fundamentals, they are all quite strong. So I think in terms of the valuations, right, they are similar to Google's. It's just that in terms of, if you compare the PE, of course, they are more pricey. But you have to remember, this is a company that is like totally monopoly in one sector, which is lithography. Yeah. You guys have these stocks? No, right? None of you invested in these companies, right?
Actually, I have a question. So
I
recently, I
have.
saw a news about Chi Keng has about China developing their own lithography technology. Probably it won't beat ASML, because the companies who are using their stuff are already using that, so they won't like switch over to China. But what do you think is the impact of China developing their own technology?
There's this YouTube channel called what, Asia Econometry. What's the name?
Asianometry.
Yeah, I can't Asianometry. He produced a very good video on that topic, covering China's lithography machines. So I think, just to like a very quick summary on that video, right? Two things. The first thing is that whatever we know about China lithography, right? That's just like one photo, and then with like very short descriptions. There's not much being shared. So the conclusion is that nobody knows about that things, whether it's good or not, stuff like that. People don't know about it. Okay, that's the first caveat. And second thing is that I think in terms of how good is China in this space, right? Actually, China only need to make the EUV works. As long as it works, right? Even though, let's say, economically they are not as good as ASML machines, right? But as long as it works, then it will sell. The reason is because in China, they can't access ASML EUV machines. They either have to develop themselves, or they just have to use the less advanced, called the DUV, different technology, totally different. So they can't do those like 432 nanometer that well. I think there's still quite a number of techniques like multi-patterning, those kind of things, just to make sure, just to keep advancing the chips. It's just that they are not economical. So I think for China one, so that being said, right, I would say that as long as it works, right, they will produce that machines, and then they will refine from there. Another thing is that all these things, right, is created by human. So if the European is able to do it, China, with all the resources they throw into creating all this EUV, right, it's a matter of when. It's not a matter of like whether they will achieve it. So it's like some people will say, oh, they can achieve it in less than few years. Some people say, oh, they lag behind 5 years. Some say 10 years. But it is the number. Some they will catch up. It just like don't know when. Yeah. So that's the response to the China EUV topics. From time to time, there's always all these news come out one. But then after the news come out, then after that, it's like no follow up already. We don't know what happened. But not saying that they don't have progress. Actually, China's progress in chip, in lithography is like quite, they're progressing well. Like just that first thing, they don't sell all these machines outside of China, right? And we are sitting outside of China. We also don't get this kind of news coverage. So I would say they are working very hard behind the scene.
Kelvin or Kelvin?
Actually, I have two. Actually, not just two lah. Like after the whole Tesla thing, I've started to look at other companies. So actually, I found a lot of better companies that have better valuation. Not better. I wouldn't say better. The bulls will come after me. I think there are other also promising companies that is also trading at rather good valuation lah. I'm actually looking at two in particular. Like right now, like if you just ask me right now, first is AMD. The other is Adobe. I guess I will talk about AMD because I don't know, it's more controversial. Adobe is a lot more straightforward lah. So let's talk about AMD. So for AMD, the reason I'm bullish on it is because they recently started to turn around their revenue growth. So if you check their earnings, they are growing in the data center as well as the client segment as well. So for data center, I think it was near 100% growth rate, something like that. Yeah. Then they also recently acquired this company called ZT Systems. So I think what NVIDIA did was they're basically a full stack lah. You buy them, they help you deploy whatever. So for AMD, they don't have this deploying stuff that much lah. So they are just buying someone to help with the deploying stuff and also to get their data scientists or something like that. I think AMD, you don't have to overtake NVIDIA to do well, and NVIDIA doesn't have to lose to AMD to do well. So I think AMD can be a good substitute for NVIDIA, their data center stuff lah. So because I think some companies may not want the highest end chips, they can just go for the second best, which I guess is AMD next in place. Then that's on the data center side. Then on the client side, AMD is actually fighting with Intel. So they are slowly gaining shares. Right now it's only like, I think like 20+% range, while Intel is near the 80% range. So they are slowly gaining market share lah. So these two parts are growing together. So here's where we see the inflection point now.
I have a quick question. If actually NVIDIA and AMD is so-called same valuation, right? Why not just buy the big one? As in, why not just buy the clear winner that saw their revenue growth like triple digit? Everything, margins are sky high. They are the industry standard. Why want to go and buy the second one?
Okay, for AMD, their margin is also starting to improve already. So that's the first thing. Second, I guess, is I'm buying both. So it's not like I'm ignoring NVIDIA. I'm buying both. And in fact, NVIDIA is a larger position. AMD is more like a speculative investment. So the allocation is a lot smaller lah. And I think like for NVIDIA, for AMD, the price is so depressed that if it goes up, my thesis is that it will go up a lot more than NVIDIA lah. So that's just my bet. I'm buying both lah. Yeah, I'm buying both.
So it's of size, meaning to say like, you think that they still have potential to multi-bag, but like NVIDIA is 2-3 trillion. You multi-bag already become 10-15 trillion, a bit hard to imagine.
Yeah, so NVIDIA is definitely the safer bet. For AMD, it's more like, I don't know, a higher risk bet. But I think this higher risk bet is based on the fundamentals lah, that is turning around.
Okay, we'll get the largest NVIDIA bull here to maybe share some comments. Actually, Boon Tee, why you never buy AMD?
Maybe both companies also trade for the next 2 or 3 years. The whole entire AI market is a giant bubble. Everyone get DeepSeek at once, down 80% in the next 3 years. Who knows? We don't know what is going to turn out, right? All these things are so new. Okay, what was the question again? Why I haven't invested in AMD? Because they are not winning. So you have to win first. In terms of the product, because of the strategy.
Wait. I this one I need to push back. You invest so early on. That time NVIDIA was not winning also. I still remember NVIDIA was like a negative top line growth rate.
No lah, they always win one. In terms of like you see, it's like if you study Nvidia history, right? It's a bit similar like Meituan history. It's like they went through the era where there's 100 GPUs company. For Meituan, it's like there's hundreds of all these what they call it 团购 things, right? Like everyone is like just doing the same thing and then just see who is better. So Nvidia they went through that, and then the interesting part is that during those stiff competitions time, right? They really win their competitors, and then while winning that, they get their competitors' best person to join their team one. So if you look at Nvidia's teams, right, those very good people. Usually, like quite a number of them. I mean, at least historically, they came from competitors. So they really built the best team. So that's how they win. When I say winning, because before the data center business picked up, they are all like mainly focusing on the gaming business, right? Gaming business, definitely they are winning. Um, I think when AMD, not to say AMD is useless, it's more like when AMD trying to compete, sometimes I think they use price as a lever to pull. Like we can offer you similar raw power, but our price is cheaper. So sometimes it's like give a better value propositions. But actually, in terms of the product, especially on the software side, Nvidia has always been winning, and they always provide a better software. And now in data center, data center is not just about whose chip run faster, right? It's not just that. It's the entire end-to-end server stack, software, hardware, everything, networking, everything, all these things. So I think again, Nvidia is the one that invented this end-to-end, and then even when it comes to as simple as cooling, I think they spend a lot of R&D just to make sure they have the best cooling. So yeah, in many ways, their products are still winning.
Okay.
Okay, what about Chi Keng?
I have been adding to both ASM and Google, but if you want me to come up with something different, I'm actually out of the Mac 7. I like Meta and Amazon more. All things considered.
Chi Keng, you have to pick Amazon.
Why leh?
Because today, right, the companies that we cover all start with A one. Alphabet, SML, AMD. Just now, Kelvin
Okay
talked
lah.
about Adobe.
Amazon
Left with Amazon or Alibaba also can.
AMD. No lah. Have as in ask you to buy now, right? As in the perspective is that in the volatility, right? The problem is the China market also never come down. How to buy? It's like it's always holding there. So Amazon,
So you're no longer bullish on Alibaba?
no, I'm still holding. Whether I'm bullish or not doesn't matter. It's more like you want to buy when there is fear, right? But it feels to me like I don't know. Actually, if it cuts your memory back a little bit, I think before Trump was elected, wow, the whole atmosphere back then was like, wow, Trump 2.0, tariff plan, China confirmed cannot make it, everybody cannot come back. Then who knows their equity market, the performance this year is like one of the top few with like Europe also, if I'm not wrong. I think was it Germany's market or some other European market.
Euro
Also,
is
they
doing
did,
well.
yeah, it was
Very well.
so the lesson that we can learn here is every dog has its day. So anyway, back to Amazon. Yeah lah, okay lah. So Amazon, nothing much lah. I think big company, still long tailwind, expected, still moving at they can grow double digits. A lot of their higher margin businesses are growing quite strongly. A big part of their revenue, which is the first party business, is slowing down, but they've already turned profitable because of their operating leverage. They're firing on all cylinders. The only issue is that I think if you judge from two metrics, right? One is operating income, one is free cash flow. Operating income is fine. They say that they're actually still currently trading at one of the most undervalued. But the issue is people always try to look at free cash flow. And then Amazon, if you want to judge them based on free cash flow over the last 20 years, there will never be a point in time that you can buy Amazon because they're always trading so-called very expensively. So in that way, I think there's a lot of value judgment here where you need to differentiate between growth, capital expenditure, and maintenance capital expenditure. So even though the baseline maintenance keep increasing, but a lot of the part is into growth and they get a reasonable returns on their investment. So just generally looking at Amazon, yeah, I do think that they're undervalued. They continue to be undervalued. The biggest worry that I probably have is more on a lot of the promises that they sell, right? Like let's say robotics, into medicine, into trying to the very famous saying that they coin, your margin is my opportunity, right? I think the bigger worry is when they stop expanding and there is not much markets they can go into. I think then when growth start to slow down and their leverage start to come down, then you probably will want to worry lah. I think for now they still look poised to become the biggest company on earth by revenue, not by market cap. Yeah, so that's generally the thesis that we have here lah. Yeah.
But
Anything?
Amazon right now is still not cheap, right? Like,
You see what metric you want to use, lor. If I think you use price to operating income, they are at one of the lowest really. Price to free cash flow, you will never be able to buy it lah in the last 20 years if you use free cash flow. PE also you will never be able to buy. I think I wanted to draw the comparison because I was looking at both Amazon and Google, right? So when you look at Google's relative valuation over the last 10, 15 years, they've always been never expensive. Meaning to say they always trade between the range of 20 to 50 times. Whether you want to use PE, you want to use price to whatever, free cash flow. So it means that actually the story of Google has always been unexciting. That's why nobody wants to pay premium valuation. Then you compare it to companies like Amazon, they're always at the upper end and they're always trading at a much higher premium. But you need to go back down to like the business capital structure and how they look at some of these investments and the growth trajectory ahead lah. So looking at back to the answering the Amazon part on why they always look expensive, it's just that they're always able to grow top line quite steadily without much worry. And when you look at their bottom line, whether you look at operating cash flow, whether you look at operating income, look at free cash flow, they always go through this kind of cycle. When they go through their high capex cycle, then margins all look damn cui. Then sometimes when they start to optimize, then you see boom, 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 then it goes up like very quickly. So meaning to say, everybody is still trying to guess like where is the optimal margins, you see, because they always don't want to show their deep high. They don't want to show their hand to tell people that actually this is the amount of money that I can make. I just keep investing, keep going, plowing back to the business, give better customer experience, so that when I don't know, is this a part of a grander strategy that they want to hide? But this has always been the strategy since day one. So yeah, I hope I managed to answer.
Chi Keng, can I ask you, like, how do you differentiate between the capex that's used to increase revenue, like investing for infrastructure, for example, logistics, storage, and all this to improve the customer experience, versus maintenance capex, which you definitely have to spend? Did they break it out in their reports?
I believe no, but they do give hints in terms of, like, let's say during the management call, I believe it was like 2 years ago when they were at like negative 20 billion on the trailing 12 month. Back then, the biggest site, like why they cited this big negative free cash flow was, I think they admitted to the mistake that they overbuilt their whole data storage and whatnot. No, sorry, not data storage. What am I talking about? The inventory storage, where they basically built out an entire FedEx logistics system within the last 3 to 4 years. So it was also to kind of combat what happened during the COVID boom. But thereafter, I think everything started to normalize. But that said, now the in story for most of these hyperscalers is, of course, to build out their cloud infrastructure, right? So they will always go through this whole phase where, how do you want to differentiate, or what's the number? I think we all, like Amazon investors, I believe, Boon Tee, you will all have your own number, but we cannot verify that my number is more correct or number is more correct. But what we can see at least is the most of the major trends are trending in the right direction, whether in terms of revenue, and now margins are also trending in the right direction where you see expansion. But back to the question again, where they're going to plow a lot of money back to capex, so you'll see it coming down again. Then people not happy, they got recession, growth might not come in, you don't deliver, then people that are more short term will sell because they are not bullish on Amazon anymore. Yeah, but anyway, Boon Tee, you got comments?
Yeah, I think Eric asked a very good questions on this, because actually, even if you are expert in accounting, right, just based on the disclosure, very, very hard to tell whether the spending or whether the capex is really for like to expand their revenue, or is it just maintenance only. It's very hard to tell one. So I think often we just have to base on their past historical capex spend, and then you look at historical spend versus today's revenue. Are they able to generate revenue lah? Because if they really spend on things that is really wasted, right, you can't even see the revenue that come in, right? So it's we have to rely a lot on the track record lah. So that's one thing. The other thing, not just about the capex, right? Sometimes capex is like very clear. You buy all the, let's say, like the GPU, the server, everything. You buy buildings. All this is like, okay, very clear. These are capex, and you should amortize these. And whether the amortization versus the revenue versus the earnings, whether they provide the ROI or not, that's a separate picture, right? The other thing that is more interesting, especially for the tech companies, right, is that even stuff from accounting perspective, you see that as expenses, right? But actually, they are investment for the future. Say, for example, let's say if they hire many software engineers, they create a product or services that has some value, like whatever they create, right? These services, they can run on their, let's say, their platforms, and then it will generate revenue, generate earnings in the future. But when building all these tools, this software, these codes, right? All these money, salary spent on these engineers, right? You cannot capitalize it on. Because from accounting perspective, it's like you pay salary, then it's like everything expense in current year, current quarter. So you can't really capitalize it. But if you think about the concept of accounting depreciation, right, is that whatever that you spend on, if the spending is not really just because of this quarter outgo, right, it is meant for future. There's some value derived from it, right? Actually, you should depreciate it over time, right? But you cannot build that for stuff that is like, for example, like the codes that is being written. So that's why if you look at their numbers, if you just look at the PE, sometimes it's really like looks low just because of there's all sorts of this kind of expenses that they just have to expense out in the current quarter, but they have value. So these two parts, one is the expenses part. The other part is the capex part, that how much they depreciate, what's their depreciation policy. But all in all, it's like it's just like very hard. Like I trust the management. I cannot just like, oh, I have make all this accounting study that I know that 75% is category which, and then hence it is a good buy. You cannot have such conclusion one, because it's a big company, and things are quite messy inside. And accounting rules is quite outdated to tackle this problem that Eric, you're asking.
Yeah. Okay.
To sum up what Boon Tee says, more like a vibe check lah. You trust me, bro. Like the management tell you can trust me that I'm investing
trust.
properly.
Yeah, I do think that you need somewhat kind of sensing in this logistic e-commerce thing, right? To have a rough sensing of what is the capex that they're spending is mostly like what Boon Tee said, investment for the future. Like for example, right, I do advertising, do marketing, right? I spend like maybe 30K this year, but I cannot see the immediate returns because it's built up gradually. But over the months, I see there is a uptick. So that is bearing dividends. It's just that you cannot directly attribute it to your investment, your so-called capex and all that. So like as a small business owner, I roughly can appreciate the nuance that sometimes we spend on certain things. You cannot explain like, oh, I spend on this, I get this return. This come from that. I can't. I just know that generally this is good for the business and I invest in it. Yeah. So I think
Actually, in fact, also because I've been following it not as long as Boon Tee, but I just looking back, right? The investment that they put in, like in terms of capital expenditure or hiring or whatever, the results will come in later on. But when the later on come, then they invest even more. So that's why it always goes back into this cycle, right? But yes, I think one part it will show in the revenue part when revenue continues to grow steadily. But this is also a very insidious point where actually quite a lot of companies they just keep telling you I invest back, I acquire, I buy a lot of things, and then my revenue keep going up, but actually my margins keep going down, or like the it just doesn't appreciate into bottom line earnings for the shareholder. And that's also why I mean you have to keep that nuance back at the mind. And one more thing also, if you look at Amazon's share price, right, when they move, actually, if you think about it, 2018 to 2022, when at the trough of what was happening after coming out from the COVID cycle and what, actually the share price didn't go anywhere for 4 years. So I think they were trading around $80, $90, $100, and then go back to the 2022 bottom, it also trade at $80, $90. And a very big concern was that a lot of people were thinking, yes, they trust Amazon's management. Yeah, I trust you, bro. You put money, then you keep investing, right? But it doesn't show in the bottom line. In fact, it went negative. Like it went to the point where people start to get scared. Like the story was starting to not fall in place. So to give you a perspective, is that in 2020, I think 2019, 2020, their free cash flow was around 25-30 B. And that was the pre-pandemic era. And then they start throwing everything back in. And then they at one point in time was like -10, -20. So yes, revenue grow by quite a bit, but then you don't see the bottom line earnings. And the bottom line actually didn't grow, in fact, shrunk to negative era for 4 years. So that's when people start casting aspersions. Oh, this business cannot make it lah. Yeah, you all anyhow invest. You got nothing to show for. But of course, in hindsight, is that the last 2 years at least, or at least based on trailing 12 months, we see that there's a very big explosion back on the bottom line when they start to cut back everything and they flex their operating leverage to try to push out earnings as well. So that's why it's always a moving thing. It's very dynamic. You don't. It's really depending on what season of Amazon that you want to screenshot and to see a snapshot of the company. But just know that I think for very old birds of Amazon investors, like people like Boon Tee, it's just yeah, I have perfect confidence that they are moving in the right direction, and I know that they will benefit me in the very long term future when they are able to flex their income muscle when they want to generate income. Yeah.
So confident until I don't monitor that company a lot. Just let it run. I trust Andy Jesse.
Has it like at least 10x for you, Amazon?
No, I don't think so. Less than
5x?
that. Need to check. But less than I think.
Amazon had its lost half decade, 2017 to 22, it didn't move at all. So unless you really invested like in the early 2000s or mid or 2010s, then maybe yes. But if you invested in like 17, 18, actually the returns are I think less than double. If I'm not
Yeah,
wrong, maybe
less than double.
Yeah.
I invested 5 years since 2020.
Yeah.
Okay.
So but don't worry, after usually you see after lost decade or lost half decade, they'll see Microsoft pew when they start to
Like Alibaba, right?
lost decade already, that one.
Coming soon.
Oh, by the way, why I was talking about the insidious part? It was because of Alibaba, and I was trying to reflect back on what happened. I think management plays a very big role, and there was a very big part of what happened to Baba, at least when it was. I believe that was during the after COVID that part when they started, or during COVID that era, they started acquiring a lot of all these offline businesses. So revenue top line looks good, but actually margins are shrinking. So actually yeah, lor, even big businesses, good businesses with very high, strong operating income, they can buang the capital, like meaning they just really throw it around. But of course, yeah, lah, they are optimizing now and then suddenly the returns are coming back again. So that's why people are excited. But that's a different story. But I'm just saying that don't think that investing means all investing is good investing. Evidently it's not lah. So that's the part where the track record and the following of the business is important. Okay, hope you guys enjoyed this discussion. Feel free to leave in the comments below on what you guys are looking at, and we'll see you guys in the next video. Goodbye.